Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
The first exchange of rounds in the trade war has taken place. While President Trump gave last minute relief to both Canada and Mexico, tariffs on China took effect as the deadline passed. China responded swiftly, with tariffs being imposed on some 80 odd products, launched an antitrust investigation into US corporations like Google, and tightened export of critical minerals. The Chinese response was slightly milder, as tariffs has only been put on $14 billion worth of goods. Good morning, JK. How are you reading these developments and what's your thought on the tariffs?
Good good morning, Swaraj. Yeah, definitely, it was a relief for the markets yesterday as negotiations became key for the way forward as far as the trade war is concerned. And following Mexico, which received a 1 month time for coming back with their proposals to end the issues with the US, the relief for Canada also gave much breathing space for the markets, and that was really reflected in the market moves yesterday as well. And as far as China is concerned, while there has been 10% tariff from both sides, it's indicated that Trump is going to meet Xi anytime soon, and there will be negotiations. And it does appear that the both the sides realize that trade wars between these two leading economies is not going to do good for either of them or even for the world trade. So I think I'm a bit optimistic that even this will result in some sort of a negotiated settlement on issues other than trade, which both have concerns about, and that could probably come about in the days to come. So market looks optimistic about these things now. Apart from that, in fact, the Mexican minister also said that 1 month is more than enough time to reach a deal with the US. It's only European side that is still not clear, because nothing has been decided or announced about a tariff on Europe, although threat still hangs. In the meantime, Europe has said that they will approach the issue with calmness, and they will also be ready for negotiations. So I think market is now keeping the uh, r- tariff issue on the sidelines. We have now back to watching the economy. Now, yesterday there were quite a few indications, particularly from the US economy. We had the JOLTS job opening data as well as the factory orders data. Now, the JOLTS job opening data showed that job openings were at a low last seen in 2021 at 7.6 million. Last month it was at 8.10 million, and expectation was for 8 million. Job quits were also lower. Now, it's interesting to note that this is low since 2021, and we, in fact, the reaction to the market subsequent to that report was that the uh, the non-farm payroll also came at a much lower number, and then it started the ball rolling for Fed to cut rates, etc. So this is something that market will watch out for, because we have ADP job numbers today, and also the non-farm payrolls number on Friday. So whether the job market is started to show some weakness, or it's just a flash in the pan, that is something that we will definitely try to assess. Then the factory orders came at minus 0.9%. Now this contrasts with the expansion that the ISM manufacturing report showed on Monday, which was quite strong on new orders, employment, and prices. So again, this may be slightly older number, because this is pertaining to December, while ISM survey is ongoing, and it is a futuristic expectation. So this may not be given much of an importance. At the same time, market has taken these developments in the economic, particularly in the employment situation, quite positively for the rates market, and the yields which had gone as high as 4.60 for 10-year after the relief on the tariff talks. And again came back towards 4.52 for 10-year as soon as the job market report was released. So that gave some also added so positive sentiment on the stock market, which had some some ground to make up after the big fall on on Monday as well. So we have seen both the Dow and the Nasdaq yesterday recover. In fact, there were relief rallies across markets, including Japan and Australia as well. So on the currencies, euro has now trading well above the level at which it closed before the tariff news came in. So it's like almost erased all the losses which came about after the tariff news, and looks like stabilizing at a higher level until more indications about the economy from the US as well as the Europe emerges. The clear winner has been the Japanese yen because it was trading almost close to 156 before the tariff news, and it's now below 154 as well. These moves reflect two things. One is about the easing in the risk off sentiment, and also on the Japanese yields themselves going up. Even today's data showed that wage increases in Japan have been on the higher side. So, indications from Japanese officials, particularly from BOJ, has been that they will be hiking rates further. They already hiked rates last month by 0.25%. So, I think market is preparing for some more yen strength. Now that even the US yields are somewhat stabilizing, not going up much, we feel that this can be a game changer for the rupee, possibly if there is more bullish data from Japan. Now on the Asian side, Chinese yuan has shown considerable recovery, trading even below 7.28. Of course, China came back from a long lunar New Year holidays, and the mainland is working only from today. But the Chinese fixing show that they are not, shaken by any of the tariff-related news, and their fixing is just 5 points lower compared to the fixing they made just prior to the holidays. No disruption there. Chinese yuan trades near 7.28, which is quite stable, and Asian markets are also stable. Now, looking at the rupee, we did see some recovery. Having traded 87.28 on Monday, it traded almost at 87 yesterday, reacting to the relief on the tariff news, as well as some sort of profit taking on the longs, or maybe some exporters also booking at high levels helped. We also heard about small intervention, but not much. For the rupee, of course, the one global headwind has been relief, but then we have other issues to contend with, particularly on the RER, which is still quite high, and we know that we have a high trade deficit and the flows are missing still. Although yesterday we saw a very tiny inflow from FIS, which is happening after more than a month. Last positive flow was seen on 2nd January. So we will see whether this is starting a trend, but definitely the stock market in India has shown good recovery, almost rising more than 3% since the low that was seen on 27th of January. This has been spurred by oversold conditions initially, and then the budget, which has been taken quite positively by the market and investors. Of course, the valuations are quite attractive now to get back into the market. That is what the reports say about the Indian market. So all in all, I think rupee is not going to make a swift recovery compared to other currencies because of the missing of flows, and also concerns that RER is overvalued and rupee should be kept at a weaker level. So unless we see a bigger slide in the dollar index, rupee is likely to trade in a narrower range between 86.80 and 87.30. And I think watching out for news from the global side right now. And of course, Friday we have the RBI meeting as well. Jury is out what they're going to do on the rates, but I'm slightly biased for a cut in the rate on Friday. Thank you.
Thank you, JK. And just quickly summarizing it, it seems that After all the tariff-related reactions which market had, they are back to the levels they were trading pre-tariffs, especially currencies like euro and even Mexican peso and Canadian dollar have recovered post that tariff-related drama. And when with respect to China, it seems it will again be used as a negotiating tactic because President Trump is most likely going to interact with the Chinese premier as well. Markets are again focusing on data. JOLTS job openings showed very low job openings in the US economy, lows since 2021. Weak labor data will be closely watched, especially since this week we have a host of labor market data, even non-farm payroll on Friday. Markets are reacting to this, and rate markets are sensing some relief. Yields have come down, stocks recovered, not just in US but other regions as well, and dollar also has lost some ground while euro has recovered smartly. On the Asian side, Chinese yuan seems unfazed by the tariff-related developments. China, which reopened today, its fixing did not see any disruption despite what's happening on the tariff front. Rupee saw some recovery, traded at rupees 87 yesterday as profit taking in dollar longs as well as a bit of exporter selling helped rupee. FI saw a very small inflow yesterday as stocks in India have seen some recovery. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.